Today we got Jack Altman, managing partner at All Capital. Jack needs no introduction. Everybody knows him. He co-founded Lattice and scaled it to $3 billion company. He's been through the full cycle of zero to unicorn and then stepped back as a CEO, and now he's back at the top as a VC. He's writing $150 million checks to B2B and AI startups, and his portfolio company includes Figma, Rippling, and Flexport. Now, most VCs tell you to hustle harder. Jack tells you the truth about building without burning out, because he's been there. He's the true operator turned VCs. We'll also talk about, the Altman brothers and who is his mom's favorite. Jack, great to have you here. Let's get paid. All right, Jack, so good to have you. Thanks again for jumping on the pod. A lot of people are listening to you. Your podcast is blowing up. So let's start with that. Like, what drove you to put a podcast out in this day and time?
Yeah, well, thanks for having me. And honestly, I just thought it would be fun, first of all. And I'm generally just drawn to things that I think will be enjoyable. And I'm not saying that as some like piece of advice or anything like that. It's just like how I work, and I'm a lower disciplined person. And I think that means that it's easier for me to do things that I like doing. And I had done podcasts when I was at Lattice, like, what you're doing. And I actually really enjoyed it. Like, I was like, it was good for the company, but it was also just like an enjoyable thing for me to do. I got to meet cool people. I got to ask
Right.
them a bunch of questions that would be super weird to ask them if I was like having a coffee with them, because I'm like grilling them for an hour about whatever I feel like. You got a cat audience that just like has to listen to you. Like, that's like a weird but fun setup.
Yeah.
And so I just thought it'd be fun. And the other, I have more time now as a VC than I had as a CEO, as, you'd expect. And so I was like, I've got time to take on a project after I was a year into the fund, and I had like sort of like gotten my sea legs, and here we are. And it's been really fun.
So what was the theme? Like, what was thematically, what were the things that you're trying to get out of your interviews when you started?
Well, the tagline that I started with was just like basically it was like interviewing people that I'm like authentically impressed by about
Yeah.
things I'm interested in. That was
Yeah.
really it. And at the moment, most of my interest is in venture. And so what that means is I want to interview great VCs who have
Yeah.
accomplished things I want to accomplish. And I want to interview great CEOs that I'm trying to learn from so that I can continue pattern matching who I want to invest in. So that's
So,
basically what it comes out to.
so we're all just living in your head right now. So like whatever comes out is the thing that came to your head, and now we're all listening to it.
1000%. Yeah. I mean, that's the other thing. I don't know how you do yours here, but like, I don't do a huge amount of prep, mostly because I'm like, I just want to follow the conversation around. I want to talk to the person about what they want to talk about.
Yeah.
Um, and then I just ask, and a lot of times my questions are like very like basic. But what I
Yeah.
found is that like a lot of other people listening also have like some super basic question that they're wondering about. And it's kind of nice to hear like really impressive people talk about very fundamental things. So yeah, that's kind of how I've been doing it.
What have you changed your mind on based on the conversations you have had so far? The podcast is running for what, 2 months, 3 months?
Yeah. Yeah, two, three, maybe. Yeah. I think one of the things that just continues to strike me is how different very successful people in the same business are. That's true with CEOs, it's true with
Mm.
venture capitalists. Like, think about like amazing CEOs, and you think about how the different archetypes, if you were in a room with two great CEOs, how different they could be. One could
100%.
be super creative and disorganized and high empathy. Another could be super aggressive, hard charging, very intense, and those are really different people, but both can make it super successfully. With VCs, you can have one that's driven by technology, and their reason for existing is that they just want to push great technology forward.
Right.
Another that really wants to be in partnership with entrepreneurs. Another just kind of wants to take over the world and make a ton of money and be really important. And like all of those are great, and all of them work. And there's nothing wrong, like all those things can be really successful. And to me, that's like license to everybody to just like be yourself, and you can make anything work.
Interesting, but doesn't that break the paradigm of like pattern matching, that you pick a pattern and then you match that pattern, and all of a sudden, if the pattern doesn't match, you pass? Because now you just told me like 5 patterns. So are those
Yeah.
your patterns, or you just gonna come in and like go past the personality and go past whether that person is high empathy or hard charging or, a champion in chess and math and look for something else.
Yeah, I couldn't agree more. I mean, I don't know, like, I don't think pattern matching is a great way to go about your day, personally. I mean, you tell me, like, you and I both hired a bunch of execs. I never found that pattern matching on exec traits was a particularly successful strategy. I don't know how you felt about doing it.
It sucked. I'm never doing it again.
Yeah,
That's how bad
same.
it was.
It exactly. You gotta go. I don't know how if you think about the best execs you've ever hired, I'm curious what, you know, like, how that happened for you, but for me, it was very much based on particular nuances, certain feels, matching to the moment, not, some broad pattern out there.
Yeah, yeah, yeah. No, that's actually right. This is really interesting. Actually, you open a nice can of worms here. So you have seen lots of people as CEO in executive positions. So your experience as an operator, as a founder, as an operator, probably enriches your point of view as you're thinking as an investment, right? Because you're looking at an individual, and that individual either delivers alpha for you or it doesn't. So what have being an operator teach you about the way that you now pick companies for the portfolio?
I mean, some of it is, it's a little bit easier to share the language because, you built, I think a bigger company than I did, but, I can at least talk to you about the parts of building the company and managing hundreds of people and the first round of execs and the second and the third and,
Yeah,
doing
yeah,
product
yeah, yeah.
expansion while, all that. So I think there's a common language and just, some of these, it's like you can like read about traveling, but it's not the same thing as going somewhere. I think
Right.
there's a bunch of things like that where you just have a certain empathy for it. The truth is, and I tell founders this all the time, like, I don't know that having me as a board member particularly will make a company more valuable or anything like that. I don't in general think that investors make companies more valuable. I
Yeah,
do think investors can make the journey of a company more enjoyable. And so having an investor that, understands what you're going through and can be a voice and, can help as much as the next guy. So at least it's a
right.
neutral trade. But yeah, I don't I'm not sure yet that I can say that the operating experience makes me more qualified. It's just way too early for me to have that kind of confidence in it.
Interesting. Well, the fact that you don't have confidence makes you more relatable.
I think it's crazy to have confidence in your ability to pick these companies. I mean, like, I'm like, if you once you've demonstrably done it a zillion times, like, great.
Yeah. Yeah, yeah,
But
yeah.
think about what a random walk it is.
Yeah, I was talking to, one of my board members yesterday, and he was mentioning that he was offered a board position at some important company, and he immediately said no. He's like, "No, no way." And the person who was offering the board position, he said, "That's exactly the right answer. We'll have you in 6 months."
Yeah.
And it's interesting how, like, the selection process is so non-trivial that I don't know that I could ever be a VC because I don't other than the obvious, like, you know, size of markets and tailwinds and whatevers,
Yeah.
picking people is incredibly hard. You have any secrets for how you pick the individuals that you end up investing with? You got a big broad set of things that you have bet on.
Yeah, I mean, first of all, in terms of being a VC, there's a lot of reasons to do it. One can be because you think that you're gonna be way better than the next person. One can be because you wanna create a certain type of change. One can be because you enjoy certain aspects. So, there's, like, a host of good reasons to do it that aren't just about being great or making money or whatever else.
Right. So what is yours?
Well, I think what I got into it for in the first place was because I think I've always preferred the role of being a supporter and a coach to being a directive setter. And obviously, being a CEO, of course I did it and I didn't not enj like, I enjoyed it and I was capable of doing it and everything like that. But I think in my true zone of comfort and best expression, I'm doing something more like being a trusted sounding board, and I think I even did that with, execs at Lattice, and I don't know if I think that's the strongest way to be a CEO, actually. I think it works well as a VC, and so I was drawn to sort of, like, the shape of role and, like, what my interactions are meant to look like if I'm doing it well. So I like that.
So how do you parlay that into an advantage in the conversation, in the deal?
I think basically there's a set of founders that, spend time, it's such a two-way street, obviously. Like the market is so competitive. Great founders have so many choices. There's very few people I've invested in so far where nobody else wanted to invest. It's just like not where the market is, which is great, by the way. Like there's tons of capital, there's tons of VCs, and like, hell yeah, that's great for founders and that's good for innovation. And like founders should have all the cards. Like they're the ones starting the companies, they're the ones who are making things happen. So like I'm here for it. That's how it should be. But it's like a two-way pick. And a lot of it is them just choosing who they want to spend their time with. Like particularly as a board member, that's somebody who you're gonna, I mean, you've lived this, I've lived this. It's somebody that you're gonna have a lot of conversations with about things that are very near and dear to your heart for a lot of years.
Yep.
And so it's like you make that call about this person that you're gonna have super high stakes conversations with for like the next decade. And you make that call pretty quickly. It's kind of like a crazy setup, but like that's how it works. Then this thing that you're pouring your life energy into, there's this random person who is part of it forever now. Um, and so I think, hopefully it's just you spend time with people and you resonate with who you resonate with. I think that's what it really has come down to.
Interesting. You make it sound like dating.
I think it is a little bit, yeah. Even cherished execs come and go faster than preferred,
Yeah.
directors come and go.
Yeah. Absolutely. So let's talk about what you're seeing in the market. Like, what are you excited about investing in, and what are you passing on? What's the shape of all capital right now?
Well, I mean, what you're building is extremely on theme with what I believe is going to be humongous, which is that I think agents are obviously going to be everywhere. I think
Yeah.
it's going to be a huge market in tons of verticals. I think a lot of jobs are going to be replaced by AI, which I don't mean in the people won't have jobs way. I mean in the work is going to go to a higher leverage place way, because I think like, you know, support and tons of parts of engineering and tons of parts of internal operations and a million other things. And then you go out into like real world verticals and real estate and insurance and accounting. And I just think it's going to be everywhere. So you're building obviously like a infrastructure layer for all of that. And I think that's going to be huge. So we've made a bunch of investments.
Tell me more. So what investments have you made? What are they doing? What jobs are they taking on and replacing?
Yeah. So the timing of this is bad because there's a couple that are unannounced right now.
Oh,
it's really frustrating. But
g-
I would say, yeah,
even the sector. Can you tell me the sector like a little bit?
yeah,
No,
totally.
just a little tease.
Like support, sales, like voice is, I think, a really big deal. So like we invested in a company called Retail, which is building like a layer for, AI voice conversations to be had.
Yeah.
I think voice, and this is, this is like an infrastructure sort of layer thing for all sorts of companies powering just like really great voice conversations. But
Yep.
it's crazy when you realize how much of the economy is transactional voice conversations in all sorts of applications that I think can just be moved on from.
Retail is a great investment, by the way. Good job.
It's
I
such
talked
a
to
cool
those
company.
founders. It's such a cool
Yeah,
company. Great
they're
founders.
brilliant. It's such a great company. Yeah. So I'm a huge believer in voice also, which is related to agents. I basically think that there's a large percentage of current, let's say, information work. We've got a long way to go till we get into like the physical world, but a huge percentage of information work I think is really going to be able to be done by this stuff.
Yep. What else do you invest in? So you said you have three. Tease it up a little bit that you can talk about.
Oh yeah. Well, there's a bunch of, I mean, I can also talk about some things outside of AI to the extent that it's interesting. Obviously, most of my investing has been AI. Most of it's been sort of
Yep.
B2B company, which effectively means AI. Like another one I'll mention just real quickly here on voice, which is operating at sort of a different layer, is David AI. And basically they're doing data to power, the models that, make voice interactions possible. And so to me, I think there's, as I mentioned, huge believer in voice. But I think that data is going to be a massively important part of the picture. And as time goes on, I think it's going to be a bigger and bigger deal. Obviously, there was like the scale meta news, but what's been left in the wake is a huge amount of opportunity, I think, for new companies providing very focused, very modern versions of providing the best possible data to these models.
Right.
So I'm obviously very excited about that.
So, it's interesting. Let's talk about retail because it's a fascinating company. I think there's like 8 founders or maybe
5.
4 or 5 or 5
Yeah,
founders, 5 founders.
a
Okay.
lot.
Which is a lot of founders, all great people. They're crushing it. And it reminds me of a theme that I'm seeing more and more that is these companies are smaller. They're hitting, a scale revenue a lot sooner. And so, what are you advising or not advising as you see in this development? Because we did not see this in SaaS, right? Like to hit,
Yep.
$10 million, you need to have 50, 60, even close to 100 people to even get there.
Yep.
And you have to pump people through the system to get your sales going and all this other stuff. Like, what are you seeing differently, and how are you playing that out?
I mean, it's totally true. I don't think we're not yet, I'm not yet seeing many, two-person large scale B2B companies because you still do need to do some things with people. But
Right.
it is certainly on a revenue per employee basis completely changed. And a lot of these companies are experiencing just like dramatically more productivity per person. And some of it is coming because they're using AI themselves to, be more efficient. I also think a lot of it truly is coming just because market pull and demand is so ridiculous. And it's still basic SaaS physics where, if you have crazy amounts of demand, and your CAC is really low and your ACVs are really high and all the rest of it, like you are still just pumping an incredibly, like inappropriately efficient funnel through. And that's a
Yeah.
moment in time thing that I don't think should work forever, but markets can be inefficient for, like, quite a long time. Like, my experience of, like, pre-AI SaaS was that it got efficient sort of towards the very tail end of, let's say, 2021 or something like that,
Yep.
and you were starting to be like, "Alright, like, most of the kinks in this market have been ironed out and appreciated." But I think for maybe a decade, it was inefficient. And so I don't know how long it'll be inefficient here, but if the AI pull is as big as it appears to be right now, you
Yep.
could have many, many years before the correct number of companies were being started and competing, even as competitive as it feels today.
Interesting. So you still think that there is a long road ahead of us of inefficient growth before we start seeing some operating leverage?
I do. I mean, my comment there was more general, which was that it's possible.
Yep.
Not that I'm somebody who does not have high conviction in any future-looking opinions, but
Yep.
I do, if you made me bet, I bet that we are gonna see just, like, a humongous amount of growth still at these application layer companies. But, yeah,
Yep.
it's more just that I think if it works the way it looks like it could, it'll stay very good for a while.
Got it. So now you talk about application layer companies. So what are you like sitting back and just waiting for a good pitch on? Like what are the verticals or like the problems that you have identified that somebody comes to you with that pitch, you're like, we're in.
I, for better or for worse, I don't really operate that way yet.
Okay.
Maybe I won't
Yep.
ever, but I don't really operate that way yet. And the reason is for me, the whole thing starts and ends with the founder. And, after that, then I want to believe in, what they're doing and everything. And so it's not one or the other, but like step one for me is very, very founder driven. So I spend most of my time thinking about people and networks and you know i I tend to think that the founders are going to understand opportunities so much better than me that
Yeah.
um I'm much more in that mindset. That's not to say that I don't think certain things will happen and then try to go meet the companies in a particular space, and I'll get really curious about an area and then try to go and spend time with some of the companies that seem interesting to me in that space. But generally speaking, I'm not like waiting for the pitch, I'm waiting for, like, people.
Got it. And the people who have excited you the most have what traits?
back to the pattern matching thing, it's all over the map, and so it's really hard. It's like I was really excited to get to invest a bit with you just because your background's so amazing and you've proven that you can do it. And then I'm also really excited to invest with, a, you know, 25-year-old founder who's never worked at a company and just has a brilliant idea. And
Yeah.
so it's really hard for, there's obviously traits across it. You want like an intensity, you want like a certain you want to understand like a driving motivator for the person, either because you believe something about them or their, upbringing or where they are in their lives or something. But, it's so hard to build a company and there's so many twists and turns and
Yeah.
challenging points and years ahead that having a reason to push through, not just the next 6 months, but the next 3 or 5 or 10 years. I think, you do wanna understand the motivations. But yeah, I mean, you really are the investments I've made where it's really worked out over and I've done investing in various forms for the last, like, 10 years.
Yeah.
But the ones where it's really worked out, like, it really is people that it's really hard to build a great company, that's not led by somebody that you're really impressed by. And it doesn't have to be on a certain dimension. They don't have to be the most intense person. They don't have to be the most genius person. They don't have to have the craziest, but they've got to have one of, these outlier traits somehow.
Got it. So if you were to build all capital into, a multi-stage firm, a la, just pick your multi-stage firm, how will you coach your new investors? What are the Jack secrets that you would impart?
Because I've done a lot of investing, as an angel and while I was at Lattice, but I've really only been giving this, my 100% time for 18 months. So I don't think I think I could use somebody to tell me their secrets, which is part of why I'm doing the podcast rather than me imbuing secrets on somebody else. But I think the way I would design it would be looking for people who are going to have great taste and great instincts about people. And then the work that I would try to do with them is more about helping get them in front of the right people at the right time. I think that part is more learnable and can be done more with effort. And then I think the people who know a special person when they see it, there's a certain level of, specialness that I think almost everybody can see when they meet it. But there's
Right.
a lot of founders that I think, like the Airbnb rounds in the early days, special as Brian Chesky is, everybody missed it. And so I think there is something there that is, at least to my mind, a lot harder to teach. And so
Yeah.
I would spend more of my time of how do you get into the right rooms with the right people, you know, at
Mhm.
the times that matter,
So it seems to me that you're in learning mode. Like this is still
for sure.
building your priors, if you would, so that you
Yes.
accelerate your
Yeah.
decision making later. How long are you gonna be in this stage? Like, do you have like a milestone by which you stop learning, you start imparting?
Maybe when I'm like 60, I'll stop.
How do you pick that date or like that age?
Just something far away from now. I'm 36 now, so I think like seems like one of the things that drew me to this business is it seems like one where the only way to stay good at it is to be a lifelong learner at it.
Yeah. Yeah.
And so my intention is to always approach it in a way where I'm just at the beginning, and my hope is that I've made, you know, undeniably good investments and I'm still like I need to learn from everybody I can constantly.
That's amazing. Let's talk about, the obvious question. Your brother is in the news quite often. And when you go home and outside of the limelight, who does your mother like best?
Uh That's a good question. I didn't know where you were gonna go with it. Um, it is probably one of the best gifts we got, growing up was I think we all got extremely showered with love and support, and we were like 90s kids, I guess
Yeah,
we were
yeah,
born board
yeah.
babies, but we were like, there was like that era, which I want to do with my kids of, telling your kids they can do anything and kind of very over the top support it, participation trophies for everybody.
Yeah, yeah, yeah.
And so like the joke answer to the question is me, of course. But the serious answer to the question is I think we really all did get like quite a lot of like over the top amount of love and belief. And I think that was a really, really good thing.
Yeah, well, the real question that I had behind the question was when your parents or your mom, your dad computer breaks or the iPhone doesn't work and they get frustrated and they're gonna call one of you, which one is she calling to
I
fix
think
it?
at this point, any of their IT problems were all pretty capable of solving. As
Okay.
kids, Sam was the one playing with computers, and so he was solving. And the IT problems used to be harder than they are now. So it was
Right,
Sam.
right, right.
I
So
think
Sam
now we
was
all got it. Yeah.
got it.
But he was the
That's a
IT guy growing up.
that's amazing. Well, we all need one. So
There's got to be somebody.
that
May
job
as well
is
be
taken.
Sam.
So right, right. So
100%.
you help out in the kitchen and the garden,
For
there's
sure.
other things.
I do the cooking. That's right.
That's amazing. The let's get back to AI agents because they're I spoke to the retail guys and it's a great company, super good growth, love the dudes, but the space is getting busy, and I'm noticing across the AI agent world, spaces are getting a lot of attention,
Yep.
and most importantly is that they're bleeding into other spaces, right? So you can't be a voice provider by itself without dipping into customer service and customer support. And that area is also getting busy. So how do you see
Mhm.
this playing out? Like who picks what lane? How do they stand out?
Yeah. Yeah. I don't know. I don't know exactly. I guess nobody does exactly how various there's multiple markets here that will bleed into each other. And then
Yeah.
within those markets, there's also a lot of subcomponents.
Yeah.
And so even within, retail space, there's companies like Vappy and Bland and others that do, you know, similar looking things. But I think even within those, there's huge differences between being SMB, mid-market, and enterprise, between
Yeah.
serving, you know, US or international versus being focused on e-commerce versus highly regulated industries versus whatever else.
Got it.
And so what happened in SaaS, and then of course, as you're mentioning, those things overlap and intersect with support and sales and sort of, information collection and whatever else.
Yeah.
And in a lot of cases, these companies are customers of each other or partners with one another, or, you think about a company like 11 Labs and how it intersects with all of these things. And it's maybe, can both be a vendor to its competitors. Maybe at some point it kind of starts compete. There's a lot of these dynamics.
Yeah.
And it depends on how big you think each space will get and how different the capabilities needed within that space look.
Yep.
The bigger the space and the more the differences are, the more often you'll see many companies inside a single space that can succeed, obviously. And we saw this play out in like last generation SaaS, where some markets were just like not big enough and not different enough, and you just get one company that like fully dominates.
Yeah.
Versus in something like payroll, let's say, there's like 8 public companies that are all worth like $10 billion that just do different versions of payroll and have different reasons for existing and stuff like that. So it just depends.
But it's really interesting. Play that forward because, like in the in the payroll world, like HRMS in general, right?
Yep.
There is four or maybe five, Paylocity, Paycor, whatever that
Paycom,
do
Paychex. There's 4
Paycom,
pays.
Paycheck, yeah, and they all do the same thing, and they're serving roughly the same market. And this is not even counting the ones that are not public, like Bamboo and whatever.
Yep.
That they're in the same space.
Yeah, I mean, there's a lot more we could have named there. Ultimate, there's ADP, obviously,
There you go.
Gusto
There
and
you go.
Rippling. There's a lot.
Yeah. There's a lot. And it looks to me that they're just taking customers from each other. And like, Rippling happens to be the one with the most advanced technology and like the whole compound startup thing. But now they have
Yeah,
deal too. And there's so how's that to play out? Like right now, and this the SaaS world feels to me like a mess of like,
yep,
people taking
yep,
customers from each other. Is that
yep.
how AI is gonna play out, or they're gonna really pick their lane and stick to it?
Yeah, I mean, so they are taking customers from each other, but I think a more accurate mental model for it is like overlapping bubbles, Venn diagram style,
Hmm.
where they do have like they don't just exist because they both got started and they're just fighting each other and that's that. They
Right.
have actual differences, and there are some customers that are only, there are some customers that when Paychex goes up against ADP, there are some situations where ADP is destined to win and some where Paychex is destined to win. There's a lot where it's up for grabs and there'll be a strong contention, but there's a lot of differences too. And it
Yeah.
turns out in that space that it's because as you change sizes, as you change, employees' remote locations, as you change what integrations you need, as you change the ability to handle contractors or do time and attendance and blah, 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 there's this long list of differences. And
Yeah.
so you got, speciation, and you got a bunch of different sort of outcomes, as those product teams follow different paths and follow their niches.
Yeah.
I expect over some time horizon, the same thing's going to happen in AI.
Mm.
The people who get into the game at all to enough scale are going to be the ones who, have earned the right to carve out a sub niche. But in, take a huge category like agents for coding, which seems like, maybe the biggest category. You'd think if that's going to be a 100 billion or 500 billion or $1 trillion market, which
Yeah.
maybe it will be, you'd think
Yeah.
there's going to be a lot of players.
And there are.
Yeah, and you think you'd think the steady state will contain many players too.
Oh, I see what you're saying. And it will just be a matter of flavor.
Like that it's not simply that one, like who's going to win, but rather it's who's going to be the best at which part of the market. And then you could ask which part of the market's going to be the best and who's going to own the most of it, but that it might be that many of these companies are really big.
Interesting. So it's a little bit like a game of Risk, right? It's messy at the very beginning.
Yeah.
You're sort of carving out the world, and
Yes.
then towards the
That's
end
how SaaS works.
turn of the game, right? Rest and
Yeah.
South ended up working, and then you're just trading little tiny countries. That
Yeah, that's a good analogy.
the thing that I find fascinating that I'm dying to get your perspective is, so we get to talk to a ton of vertical AI startups, right? And they all sound small, right? Like the one that I told you when we started talking about this podcast was AI agents for, home estimates. The one that I talk to a lot is AI agent for mortgages. And then there's AI agent for insurance
Yep.
policies and AI agents for like, very, very,
Yep.
very tiny slivers of the market.
Yeah.
Would you invest in those that even though the market seems small and constrained? And why would you invest in those?
I mean, I think all of us, whether you're an investor, a founder, a, prospective employee, I think we all suck at trying to guess how big a market's going to actually be.
Yeah.
It's just so hard to tell for so many reasons. Like, when you do the P times Q in one of those markets, it's so easy to get everything so wrong. And, you get two things wrong by
Mhm.
5x, and then you
Yeah.
misjudged by 25x.
Interesting.
And so it's just really hard to know. I don't think that's an excuse to not try. And so, like, I still think you should do your best to gauge, do you actually think the market's really big?
Yeah.
And you plan that sometimes you're going to be wrong, but I think you still have to try and make your best assessment. And you just know that you're not going to bat 1,000. And so, to answer your question directly, like, no, I won't invest if I do the best I can and decide that I just don't think a market is particularly big. And I do that all
Mm.
the time. And
Yeah.
most markets aren't. I mean, the right answer is that most markets aren't that big. Like, there's
Right.
very few markets that are, relatively speaking, compared to all the ideas that get tried. There are fewer truly huge markets.
What do you mean big? Like, what does big mean to you? Is it outcome big?
Well, the way I think about it is for a founder, a $500 million exit is life changing for their grandkids. And that's awesome.
Yeah.
The VC model is obviously shaped differently. Whereas funds have gotten bigger, rounds have gotten more competitive, ownership has
Yeah.
gotten much smaller for people. And so there's different business models there. And so you do need as a VC to think about, Josh Koppelman talked about this on my podcast of like, depending on your fund size and your ownership targets, that's going to drive, all of your math.
Yeah.
And so if you're a $500 million fund and you own 10% of companies when you first invest, and you're going to own 5% at the end of the game after all the dilution and everything like that,
Mm-hmm.
you need like a $10 billion company to return the fund once.
Right.
So you just got to be real about what the math is. And then you got to think about, is the market big enough to support those? And if it is or isn't, do I need to be the number one company in the space, or is it okay to be the number four will there be five $10 billion companies? Will there be one?
Yeah.
And kind of just like reason through it.
But so play that forward. So if you pick let's say that you find a vertical agent in what you think is a constrained market, right? But you get to write a check. You get to write a $1 million, just to make easy math, a $1 million check at a $10 million valuation. You got 10% of the ownership of this thing,
Yep.
and the company may not need many more rounds, maybe one more, maybe none,
Yep.
right? And the company then exits at 500 million valuation to some kind of private equity that loves the
Yep.
market, loves the growth, loves the ownership.
Yep.
Can you not live on a steady diet of those kinds of outcomes? That's pretty amazing, especially if they happen in a pretty short amount of time. Like, so
Yeah, you can.
where
It's
am I
great.
wrong on this reasoning?
I don't know if you're wrong, but empirically speaking,
Yeah.
it seems like the best funds out there don't live on steady diets. They live on outliers.
Mm.
And I'm not sure why that is, but for whatever reason, it seems like all of the great venture firms or particular funds, the way that they became great was the, it's the Peter Thiel outlier, power law thing.
Yeah.
And it's not a bunch of 0.4x the fund returners. It's not that you get 10 of those. I think that's probably harder to do than getting 1 4x, or at
Right.
least I bet it's rarer. And so I just don't think it goes that way in practice. I don't have a good explanation for why. I just think that's how it goes.
Interesting.
That said, I still think the 1 at 10 in something you think is a small thing can work, both because sometimes that investment itself is great, but also because of the fact that it's not like we as any of us are judging markets accurately a high
Yeah.
percentage of the time. So you think it's small, but then, 15% of the time you were like stupidly wrong. And that company that you didn't think was going to be big turns out to be like the fun maker.
Right. Right. Right.
Or you build a great relationship with the founder and you can put another $7 million in at the Series A.
Right. Right. So back to when you look at AI agent companies in vertical spaces that you're sort of like iffy. One of the best podcasts that you have done so far, that I listened to, is the one that with Mark, where he talks about errors of commission and errors of omission.
Yep.
Which one are you more afraid of like not investing in the thing that could have been big and you can't
Yeah.
read it, or being wrong?
For sure, it's not investing in the thing that's big. Obviously, that can lead you down a bad path, and that can make you start to become too loose and to just like take a flyer because anything could work anytime.
Right.
But, you know, the obvious thing of you can only lose 1x and you can make infinite it is true. And
Right.
so, the whole game, each fund is to find, as many, but at least one really special company and get in business with them as early as you can.
Yeah.
So it's got to be the bigger fear.
Interesting. One of the things that I'm observing is that this, verticals, specialized AI agent companies are having a little bit of a hard time, painting a bigger market than what they're currently operating on, right? Because every VC wants to see the platform play. So, for instance, I helped out a founder that was in the insurance, that was building an agent that handles the policy renewals, right? And whenever the policy renews, they get paid a percentage of the renewed policy. Whenever the policy expands, they get paid, 20 or more, 40% of the expansion amount. But they were only doing that for, personal policies. They were not doing that for, business policy types. And, their deck talked about how they're going to go from like this type of policy to this type of policy to this type of policy, and eventually like get into different parts of the insurance workflows and grow. And like, yes, of course, we're all, you've been there. You pitched a platform before, and like, that half that shit is not true. And like clearly the founder didn't have the confidence on, owning the whole of the insurance workflows. But he was printing money on this one thing that he found right. So like if the bet goes wrong, he's still a very profitable company in a niche that nobody's attacking. If the thing go right, he built a bigger company. So, I followed that several times. Like there was another one that was doing car dealerships, like customer service for car
Yeah.
dealerships. And it turns out that there's a lot of pain in car dealerships and customer services because, you want to get people in the showroom and sell a car, but you also want to get people in the, in the post sales, right? Like you want to get people
Mhm.
in for checkings and engines and like selling accessories, whatever's. And
Yeah.
he was also having a hard time selling because, he was only in this sliver of the vertical. So what is your advice for these people building these agents, and how do they go to people like you and sell a bigger dream?
Well, one thing, just in listening to that, is a lot of founders would do a lot better without venture money. If you've got a really profitable thing that's just working, you don't
Mm.
have to get on the VC train and force yourself into needing some ridiculous outcome.
Yeah.
Like like it's and what's interesting, and I think to the earlier conversation about you know beginner's mindset and seeing what people with fresh eyes are doing and trying to learn
Yeah.
from that. When I
Yeah.
talk to a lot of really young founders, like early 20s, I've met more founders this year than ever before who are like, I'm not raising venture money. I'm gonna just like make an app that makes $20 million, and then I'm gonna go away and do my next thing, and I'm just gonna have that money in my own bank account, not in my startup's bank account. No,
Mm.
that's interesting. It's like there's like a few sort of like Darwinian evolutions like that where you see people who are not coming to this with, oh, here's the way it needs to be done.
Right.
And so I don't think everybody needs to raise venture money. And so that's a starting point, is that like if you've actually got a business that's just working and just printing money, like you should ask, is raising money and giving away equity, and also having VCs who are going to be pinging you about oh, what about this idea, and here's what should happen in the next round, and like you got to be
Yeah.
pushing for this or that, which not everybody does, but there's a lot of VCs out there that do that, and
Right.
it's not the right thing for every company. So it's right there. If somebody comes to the conclusion that no, this actually is a venture thing, where even though I'm doing great with money, I could do more great and it's worth it to me. I think by the time you have genuinely convinced yourself that you've got a good thing that can be a huge thing, if only for venture money, whatever logic got you there is very likely to also get your VCs there.
Mm.
And so I would start by convincing yourself that you need venture money and exactly why, and why this is better than, not that you should take no venture money, but, versus some small amount. Like, why do you really need real venture dollars? And whatever logic got you there is probably the best logic to get other people there.
Got it. So challenge the premise. Start off right there. Challenge the premise of
Yeah.
even like why do you even need venture money?
Baseline is that I don't want this crazy cocaine drip of venture money that looks really productive, but comes with all this baggage.
Yeah, yeah, yeah. So as you're, building, I love the fact that you are openly building this fund and sharing that you're learning from others and like take bits and pieces as you're building it out. What is all capital 5 years from now? Are you becoming a multi-stage fund with like, billions of dollars raised? Are you staying small, niche, and focused, like, maybe like Mike Maples or, the smaller seed funds that are very, very focused? Are you in the middle? Like, what's your take?
I think early stage is what I like. So maybe it's a little bit more in the middle, because I love being a, seed investor. I also love being a Series A investor. I don't think I'm, you never say never, but I don't think I am drawn to or particularly equipped for growth stage investing. But I do like, the early stages in general. And so my goal is just to get really good at being a partner to great founders at early stages, kind of generally whatever that means.
Yeah.
And so I think that probably implies a not gigantic fund. I think that implies like a relatively narrow focus. I'm not somebody who's a big believer in like platform teams. Like the way I want to work with people is just to be like a high quality, like personal relationship partner. I think to do that, that also implies a smallish, total N portfolio, so that, I'm not
Yeah.
spread thin across a zillion companies, and I, know what's going on at each of the companies. I know each of the founders. So I think those are probably like the current intentions for the design.
Has that changed? When you started, do you have a different
The
goal?
biggest Yeah, I mean, the biggest change is that when I started, I didn't know how much Series A investing I would like to do. and it's turned out that I really enjoy it. And so I've done more of it than I expected. But other than that, I think it's pretty much what I thought.
Jack, thanks again for it. This was precious. I'm glad we got a chance to have this conversation. For those who are listening to this podcast, please subscribe. We want to know who you are, and we want to make sure that you are a regular listener. We got a lot of good podcasts coming on. Jack, as usual, thanks again. Appreciate you, man.
My pleasure. This is awesome. Thanks, man.